So I'd like to talk for just a minute about why it's so important to have a good plan, well thought out, understand why you're doing it, and then be able to communicate that. I have a client of mine who I was referred into by a tax attorney, actually, and it was really initially to sort of solve some life insurance issues. Corporate-owned life insurance can be a little tricky. It can either be income tax-free to the entity, or if it's not done properly, if there's a Goodman rule violation, or if it's corporate-owned insurance where you haven't imputed the cost of the insurance to the employee, depending on what type it is, you can have some income taxable or even gift taxable benefits. So I was brought in just to review it, see what was going on. So we did that review. And then lo and behold, the two insureds, mother and father, both passed away within the year of us doing that review and also making the changes necessary to make sure it was an untaxable event. So it worked out just fine. But the interesting thing is this business, if I remember correctly, and I think I do, was about $30 million, the business. There was a couple of the children who were involved in the business that had spent their lives in it, helped develop it, helped grow it. They inherited the shares of that business. The other three children were not involved in the business, had made their fortune somewhere else, but they split $1.5 million of death benefit. So there's a disparity of, $15 million per person over here, and then $500,000 per person over here. And I was amazed. This is a really lovely family. And after about a year, after everything sort of dust had settled, I trusted myself to go meet with one of the kids who received the lesser portion. Because I had known this person for a little while longer than some of the others, and I just wanted to ask. Not poking a bear, but just trying to figure out why was that transition without any disharmony in your family? Because I knew that all five members of the family were so very close. And this person said to me, we knew that it was a large disparity. And we knew that these two who had stayed on the business had spent their lives there. But most importantly, our dad and our mom, for 20 years after they got this plan designed, every Christmas they would bring us in, no spouses, and we'd talk about what they're doing for succession and estate planning and why they're doing it. So over the 20 years, we were able to ask our questions, get our concerns resolved, know that it was mom and dad's desire. And when mom and dad passed away, we were sad that they were passed away, but we knew exactly how it was supposed to work, and it worked just like that. So my point is, gone are the days, hopefully, when there's a reading of the will, when dad and mom pass away and everybody finally finds out what's going on. If you're a business owner, and my clients typically own a business, that's really the bulk of their value oftentimes, along with landholding companies and so forth. If you own a business, then, and that's the main part of your assets, you need to know where that asset is going and why it's going there, and be able to communicate that to your heirs before you die so they can ask questions. Because the problem is, if the person inheriting the business, which is sometimes a larger value, tries to resolve the concerns of the person who didn't inherit the business and got the lesser value, they're never going to be successful resolving those concerns. Because they're tainted, because it looks self-serving for them to justify their larger inheritance against the smaller inheritance. So communication is really key. Having a good plan is foundational. Understanding your family dynamic is also foundational, and where potential pitfalls would be. But then working that into the plan and then communicating that year over year, resolving the concerns will help keep your family together and make a successful transition.